Deepak ji, shall we start? No, Deepak ji.
Yes, sir. We can start
Yes,
now.
sure, sure. So friends, basically, first of all, I would like to welcome all the participants for this particular webinar on BSE Equity Derivatives Introduction of Single Stock Derivative. I am Dr. Aditya, Chief Operating Officer from BSE Broker Forum. I once again welcome all our members and really thankful to BSE team, especially Shri Deepak Chaudhary from BSE, who is going to take us through the presentation and will guide us that how we can benefit from this particular product and increase to our business kitty. So without taking much time, friends, I'm not coming between you and the speaker. I invite Sri Deepak Chaudhary to please start the presentation. Deepak sir, it's all yours.
Thank you very much, sir. Am I audible?
Yes, sir, you are perfectly audible. Yes, and the
Thank you.
presentation is also clearly visible. Please go ahead.
Thank you. Thank you very much, Mr. Aditya.
Thank you, sir.
First of all, I'd like to thank the entire team of BSE Broker Forum for hosting this event today, especially on BSE Equity Derivative segment, which is the most happening segment, most happening product currently in the capital market space, basically. And I also would like to thank all the participants who have joined today's session after finishing the markets today. So thank you very much to all of you for joining today's session on BSE Equity Derivative segment. So friends, as you know, BSE derivative segment is the very popular, has become basically very popular in past year. We basically relaunched Sensex and Bankex derivatives contract in May 2023. This was basically a relaunch. Sensex and Bankex both are very popular indices, as you know. Sensex is the benchmark index and it has a history of over 40 years. Basically, if you talk about Indian markets, you talk about basically levels of Sensex. Whenever you say what is the market today, you always track the levels of Sensex, and Sensex has also become a household name basically. So considering the popularity of Sensex, we introduced derivatives contract on Sensex on 15th of May 2023 with Friday expiry. So this was basically a unique offering of BSE, which was expiring on Friday. Traditionally, if you see, Thursday used to be the expiry day, but currently you have index expiring on every day practically. So for every 5 days of a week, you have some or other index expiring. BSE contracts basically, Sensex expires on Friday and Bankex expires on Monday, every Monday. So these are weekly contracts. Sensex expiry is on Friday and Bankex expiry is on Monday. Since the day we launched, it was a very moderate start. We started getting traction, and week on week, we saw participation of market participants as well as clients increasing. It has been a very tremendous year, entire last year, and the first 2 months of this financial year has also passed with a very good note. Month on month, week on week, we are seeing very good participation of market participants. The liquidity is also increasing. The overall participation, client participation, number of unique clients traded, number of terminals activated, number of members activated, everything we are seeing very good participation from market participants. So after we launched Sensex and Bankex, if I talk about the numbers, what milestones we have achieved. So in this chart, you can see in the first box on the top, the Sensex turnover on expiry days has been mentioned. And in the bottom, we have Bankex turnover of expiry day. So as I said earlier, Sensex expires on Friday and Bankex expires on Monday. So in the first table on the top, you can see the turnover of expiry day, basically starting from May 2023 to till date. So you can see how the volume, the turnover has grown in terms of notional turnover in options. So the first 100 lakh crore we achieved somewhere in September last year, August, September last year. The 200 lakh crore mark we achieved somewhere in December. Then gradually we achieved 300 lakh crore, and the highest 409 lakh crore just in the month of June we have achieved. So Sensex has become very popular. You can see the kind of turnover Sensex is, on every day from Monday to Friday. Even on non-expiry day, you can see very good turnover in Sensex derivatives. Similarly, on BankX, which expires on every Monday, actually BankX was relaunched in May, but the expiry of BankX was transferred to Monday only in the month of October. So since mid-October, we have started getting traction in BankX, and today BankX has become very popular contract, especially on Mondays. Throughout the week, you can trade in BankX contract, and Monday is the expiry day. So on Monday, you will experience very good activity. In BankX, also we have achieved the highest turnover of 163 lakh crore in a single day in 3rd of June 2024. So these are the peak turnover in a single day, both in terms of Sensex and in terms of BankX. So the highest turnover on a single day for Sensex contract is 409 lakh crore. Around 53.65 crore contracts were traded. That is 536 million contracts. And the premium turnover, because when you talk about notional turnover, it is 409 lakh crore. But what was the premium turnover? So premium turnover is very important factor when we talk about the options turnover and the depth. So 34 to close to 35,000 crore of premium turnover happened on that day, and the open interest was close to 88 lakh lots. This was basically intraday open interest on the Friday. Similarly, when we talk about BankX, we have a 163 lakh crore turnover on a single day on 3rd of June 2024. 18.7, that is close to 19 crore contracts, 190 million contracts were traded, and the premium turnover was around 16,000 crore. BankX has also got very good open interest on expiry days. It was close to 32 lakh lots on that day, basically. Now, having discussed about the success in Sensex and BankX derivatives, that is basically index derivatives, BSE is now coming up with some exciting product in stocks. So what is this exciting product that we are going to discuss in coming slides, basically? But before going to the slides, let me tell you about the genesis of this stock derivatives market in India. So currently, unlike index derivatives, stock derivatives are monthly contracts. They are not weekly contracts. So stock derivatives, you will have one contract in a month. So currently, that one contract expires on last Thursday. Now, what is special in case of BSE? BSE is coming up with second Thursday expiry. So let me go to the first slide. So we'll be launching single stock derivatives on 1st of July 2024 in the next week, next week, basically 1st of July 2024 Monday. In our case, on BSE, single stock derivatives will expire on second Thursday of each month. So when I'm talking about second Thursday, it will be around mid of the month, not exactly mid of the month, but around second week of every month. So every month you will have a stock derivatives expiry on BSE on second Thursday of the week. Now, additional platform, BSE will provide basically an additional platform with a different expiry cycle. That is the uniqueness of this contract. So what is basically, we have millions of investors in derivatives market. Each client have a different taste and preference. Each client has a different risk profile. Each client has a different kind of trading strategy. So for them, and stocks being a volatile, more volatile product with corporate actions and all those factors coming into picture as far as stock derivatives is concerned, if you have multiple expiry within the month, then you have multiple options. You have the multiple choices. So for customers with this contract, customers will have flexibility of trading in mid of the month contract, and of course they have the last Thursday expiry on the other exchange. Now, what is unique in BSE? So BSE stock derivatives contract will have lower transaction charges as compared to the other market. So basically, here in the stock derivatives, for a stock future, we don't have any transaction charges in BSE. So it will be completely zero for a stock futures. And for a stock options, the transaction charges are around 90% lower than the other exchange. That is only 500 rupees per crore on premium turnover. So that is the unique benefit, unique value proposition of BSE stock derivatives contract. The other benefits include, as you know, since 2019, there is interoperability among clearing corporation in cash market, equity derivatives, and currency derivative segments. So what does this interoperability mean? So when we talk about interoperability, there are two factors. One is interoperability of funds, and second is interoperability of positions. So you have interoperability of funds facility available in equity derivative segment across the product for index derivative as well as stock derivatives. So basically a member, a trader can trade with the same collateral kept at the clearing corporation on BSE also. Then when we talk about margin benefit, so there are calendar spread margin benefit provided by both clearing corporation. So what is calendar spread? Suppose you enter into a position of the second Thursday expiry in BSE and enter into an opposite position on other exchange with last Thursday expiry. That is a kind of calendar spread between BSE and other exchange. So on that position, if it is a opposite position in a single security, then there will be calendar spread margin benefit. Similarly, there if there will be 3 serial monthly contract, and if you are making opposite position in one and next in current month and next month contract, then you will get the margin benefit. Now, as you know, delivery obligation of FNO segment on final expiry day is netted off against the opposite or positions in equity cash segment. So basically, in stock derivatives, we have a concept of physical delivery if the contract is open at the close of trading hours on the final expiry day. So basically, if you are keeping your position open till expiry, then there is a chance of delivery. So, but if you have an opposite position in cash segment on the same day, then cash segment and FNO segment delivery is merged on the final expiry. So there will be one settlement of cash segment in which FNO segment settlement will also be netted off. So practically, if the position is same in the cash segment, opposite position is same in the cash segment, then it will be netted off. Now, how the expiry calendar will look like in BSE. So currently, when you talk about stock derivatives, or you always think about last Thursday expiry, but from 1st of July onwards, you will have 2 expiries in a month. That will be one on BSE and one on other exchange. So on BSE, the July month contract will expire on 11th of July. August month contract will expire on 8th of August. In September, we will have expiry on 12th September, that is Thursday. On October, again 10th of October. In November, 14th November, and on December, 12th December. The expiry will be preponed in case of there is a holiday on trading holiday on Thursdays, basically. Now coming to the contract specification. So as I said, other than expiry day, there is no change in contract specification. All the lot size, the strike price interval in case of options contract, market timing, monthly contract, everything remains the same as you are trading, as you are currently trading. So basically, there is no change other than the expiry date. So let me go through one by one. So underlying will be eligible equity stocks. So all the currently the derivatives contract are available on 182 stocks. So all 182 stocks will be available with second Thursday expiry in BSE. A set code and lot size will be as per the contract master file of BSE, which we publish every day for consumption of the market participants. Tick size will be 5 paisa in all the securities. Contract period will be 3 monthly contracts. So current month, near month, and far month. At any point of time, we will have 3 monthly contract with expiry day of second Thursday every each month on BSE. Trading hours 9:15 to 3:30. Strike price interval, because there are 182 stocks, different stocks will have different strike price intervals. So it will be as per the contract master file. Now, when we talk about options, the strike price interval will be the strike price interval will be as per the contract master file. Premium quotation will be in rupees term. Exercise type will be European style. And then minimum number of contracts will be minimum 15 calls and minimum 15 puts on every security. Last trading day is, as I said, this is the uniqueness at BSE. Only exchange which will offer, second Thursday expiry. So we will have second Thursday expiry of each contract maturity month. Now, pre-expiry additional margin. So this is very important. So currently, the client has in the mind that since this stock derivatives contract expires on last Thursday, so pre-expiry delivery margin will be applicable only in the last week of the contract month. But here, because in BSE, the expiry is on second Thursday, so pre-expiry additional margin will be applicable in the second week itself. So from fourth day prior to the expiry day, the pre-expiry additional margin will be levied by the clearing corporation on the positions which will be open. Now, settlement type, as I said, stock derivatives settles in physical form if the contract is open till expiry. For options, if your position is in the money, because options settlement depends on the moneyness of the contract. So if your stock derivative position of option contract has converted into in the money contract on the expiry day or on the day when the margin calculation is being done by the clearing corporations, on that day, if your contract is in the money, then additional margin will be applicable. And on final day, if your position is in the money, then and your position is open, then delivery will be marked. Final settlement price is the closing price of the underlying stock on expiry day. That is final settlement price, basically. Now, what are the opportunities for the market participants? Let's discuss. So there are multiple opportunities. Currently, whatever cash to future arbitrage opportunity or hedging opportunity investors have, it will simply become double basically with the introduction of these contracts. So it will be a hedging instrument with a different expiry cycle basically. So you will have two contracts, one in BSE, one in other exchange. So basically BSE will provide you a different expiry cycle. So more opportunity for hedgers. There will be opportunity between cash and futures. So when I'm talking about cash and futures, so cash of both exchange and future of BSE, right? And options of BSE. So that will be the opportunity. Futures with future. So with different expiry cycle on the same security, one future contract at BSE and another future contract with a different expiry cycle of other exchange, there will be ample opportunity. Futures contract and options contracts, then options contracts and option contract between second Thursday and last Thursday. And similarly, the index FNO, that is, suppose you are trading in Sensex, then the Sensex versus the constituents of Sensex. So that is also an opportunity for market participants across index and across basically stock expiries. Now, this is basically very important in terms of stock derivatives. Whenever you are discussing this product or any stock derivative product with your client, you should always explain the physical delivery settlement of stock derivatives. So basically, all the open positions on the expiry day, that is in case of BSE, it is second Thursday of every month, will result into delivery obligation as per below. So futures, if you are buying and your bought position is open, then it will be deliverable. Call option, in the money call option, and put option, short in the money put options. So all these basically positions will convert into securities receivables. So you will receive the security on the final expiry day, and you will have to give 100% amount to the clearing corporation. For you will have to do basically fund paying. Similarly, of your position will be considered as sell position, means you will have to give the delivery of shares to the exchange, that is on sold positions of future, short call in the money, and long put in the money. So in all these positions, you will have to give the shares to the exchange. Now, as I already explained in the previous slide, that delivery obligation of FNO segment is netted off with cash segment on the final expiry day. So this is also a kind of benefit. So your expiry on expiry day, basically cash segment settlement is merged with FNO segment. FNO segment is merged with cash segment. So there is a netting of position between the outstanding position of cash segment and the FNO segment. Now, as I said, that BSE will have all 182 stocks, which is currently eligible for stock derivatives in FNO segment. But the major focus, or the major basically stocks which are available in leading indices, when I'm saying leading indices like Sensex, BankX, so there is a universe of 56 stocks which covers basically all major indices. So these are the 56 stocks which are part of the major indices of India, major frontline indices and banking sector indices. So all these 56 stock, if you see, they are very liquid on both the exchanges, both in cash market and in derivatives market. So the major focus will be here in case of BSE. However, as I said, all 182 stocks will be available for trading, and it will be part of the BSE contract master file. This is all from my side. Thank you very much for patiently listening me, and thank you very much to BSE Brokers Forum for giving me this opportunity to talk about the launch of BSE derivative segment. I am available for any query or for any further clarification on the launch of BSE single stock derivatives. Thank you very much.
Thank you so much, Deepak ji. Now, if members have any query, any doubts, you can please raise your virtual hand and you can ask your question, please. Deepak ji, there is a question in a chat box. Shall I tell you?
Yes, please.
Will hedging be available between futures of BSE and options of NSE?
So yes, you can make positions on both exchanges, but always remember that the expiry cycle at both exchanges is different. So BSE will have second Thursday expiry, and on other exchange it will have last Thursday expiry. So it will not be, position will not be netted off. your position at both exchange will remain open. Yes, as per the policy of clearing corporation, because the position is hedged, you may be getting margin benefit on outstanding position at both exchange. But position will be open at both exchange because the expiry of though the product is same, security is same, underlying asset is same, but the expiry is different. So position will be open at both exchange. Thank you.
Thank you, Deepak ji. Mr. Vaibhav Pandey, you may ask your question.
Yes, what is the delivery margin for the expiry? Am I audible? Hello.
Mr. Vaibhav, you are not audible.
Please let me know if I am audible. Hello.
You are not audible properly. Hello. Okay,
Okay, so there is a
Mr.
question
Vaibhav.
of Mr. Vaibhav Pandey. What will be the pre-expiry delivery margin applied in stock derivatives once we are near to the expiry? So thank you very much, sir. I have understood your query. So basically, pre-expiry delivery margin starts from 4 days prior to the expiry date. That is second Thursday. Suppose second Thursday is the expiry. So before that, from previous week's Friday, the additional margin will be applicable. Now, the additional margin concept will remain the same as it is currently happening on the other exchange. So basically, 10% of the total margin will be applicable on the first day. Second day, 25%. Third day, 45%. Fourth day, 70%. And fifth day, 100% of the total margin will be applied on the outstanding. That is how the pre-expiry margin is applied by clearing corporations. I think I have answered your query, Mr. Vaibhav Pandey. If you have any more queries, please raise your hand. So again, Mr. Himanshu Sanghvi has asked a question. When you say relaunch means, what is the exact difference from earlier? So BSE already has stock derivatives. Currently also in past also we had stock derivatives, but these contracts are not liquid. So what we have done the changes is we are coming up with a new expiry cycle. So that is the only difference. So product, since we are coming up with a new expiry cycle, we are saying that it is a relaunch of contract, because the current expiry cycle is last Thursday, same as other exchange. So these current expiries and current contracts will be closed on 28th of June. That is the last working day of the June month. So all the expiry which is available with last Thursday expiry on BSE currently till the this June end will be available till June end, that is 28th of June. After that, these contracts will be withdrawn and new contracts with a different expiry cycle will be launched with effect from 1st of July for trading. So that is basically the main concept of relaunch. Thank you very much. Another question, options will also be available. Yes, very much. So option contracts will also be available with second Thursday expiry on the same underlying security. So future and option both with a second Thursday expiry will be available. Will margin benefit be available if position between both exchanges are taken? Yes. So suppose you make a buy position on any security in BSE and a sell position on a different expiry cycle on the other exchange, then there will be calendar margin benefit applicable as per the clearing corporation's rules and regulations. will hedging be available for BSE stock derivatives with NSE index derivatives? Okay, so basically, there is no difference between index of another exchange and index of a particular exchange. It is common for all the index and their constituent stocks. So, as per the current policy of clearing corporation, of course, some relaxation will be available, but that will be as per the policy of the clearing corporations. Mr. Himanshu Sangvi has asked, eligible collateral for Sensex and Bankex will be applicable for stock derivatives as well. So, sir, currently the collateral is at clearing corporation level, at segment level. There is no exchange specific bifurcation, or there is no index and stock level bifurcation. So if you are keeping certain amount in equity derivative segment in a clearing corporation, then that particular amount or that particular limit will be available for all products across BSE and NSE in stock derivatives or in index derivatives. Again, Mr. Sangvi has a question. Can I take physical delivery for long future of stocks? So as I said, in derivative segment, in stock derivatives are basically physically settled if your position is open on expiry day. So if you're keeping your position open on expiry day, then definitely it will be delivery marked. Mr. Sasank Malviye has asked the question that how additional platform for hedging with a different expiry cycle. Can you please explain? So when you talk about stock derivatives, currently you have expiry on last Thursday of the month. So you have only one option to hedge in the contract, which is available for end of the month expiry. But with BSE, you will have a contract of mid of the month also. Practically, if we talk about July month, you will have one contract expiring on basically 11th of July, and on other exchange, the contract will expire on last Thursday. So you have the option to choose that on which expiry you want to hedge, or which expiry you should use for hedging your derivatives risk of that particular stock. So you have basically the flexibility to choose the exact expiry based on your requirement. Dennis, any more question?
Yeah, there was a question from Mr. Vinod. Mr. Vinod, you may ask your question, please. Mr. Vinod, please unmute yourself and you can ask a question. Vinodji, hello. Okay, so I think Vinodji is not audible, and no other questions and no virtual hands are we can see here. So Deepakji, I think you can have a concluding remarks.
Thank you, Yunus, and thank you to the entire team of BSE Brokers Forum for giving me this opportunity. And I also thank all the market participants for joining today. Today is Thursday, a special day because the expiry is going to be second Thursday. So from 1st of July, I request all the market participants to start adding BSE stock derivatives contract on your systems, on your basically platform. Or investors who are trading through mobile app, they should also check basically BSE derivatives quotes, BSE stock derivatives with the second Thursday expiry, and also start participating in this. Make this contract a successful contract because this is going to give more options to market participants, more opportunities to market participants. A whole lot of world of opportunity will be available with the availability of these contracts on BSE. So with this, I would like to thank all the market participants for joining today's session and hope that all the market participants will start participating from day one in BSE derivatives. Thank you very much.
Thank you so much, Deepak ji. Thanks a lot, all the participants. Thank you very much.